Spot Kennedy Toolbox for technical analysts. So today I'm going to take you through, well, something that confuses a lot of people, although it's not really difficult because if you have read the book by Robert Prechter, which is titled Key to Market Behavior, it's not really that difficult, especially if you have had someone either mentor you, that is someone who's like, a SEWA level, or maybe is certified by the Elliott Wave International itself. And on top of that, you have come across, let's say, maybe resources by the Elliott Wave International, maybe say Jeffrey Kennedy, or someone of equivalent level as him. So in that case, I tend to be very good at spotting patterns, doing breakdowns. But today, I'm going to take you through how I go about doing a chart breakdown. So we have silver here. I am actually on the quarterly time frame. As you can see here, there's like 3M. So it's quarterly. So the available data goes as back as what as January 1970 and up to the current date. So judging by what you're seeing right now, I'm just going to, zoom in here a little bit. I believe that most of you who are watching this video know that the wave principle has only 5 core patterns, which is the impulse, the diagonal, the zigzag, the flat, and a triangle. So when you're looking at a chart, you're looking for one of those patterns because it's really hard to spot, and like conclude that this pattern is a double zigzag. Just look for a fraction of it or a fragment. So looking from this level right here, I can see that the data is incomplete. That's one thing. But from this low to that high, if I ask myself, do I see a pattern I recognize? Yes, I do see a pattern I recognize. One, I believe this is an impulse right here. Secondly, I believe this is an impulse right here. I believe this is a triangle, but then I don't have that much interest, when it comes to, this price action again because it's incomplete. But I can still deduct 1 to 2 things. I believe this is A, B, and then C, D, E, and then this is 1, 2 of this entire move. So I am just going to say mark these guys later on, although I don't see a need. Now, if I'm coming from this peak, well, let me mark here the price from this peak of 38.25. So if I'm looking from this high down to this low, so let me look for the low here. I believe this is the low right here. I believe that's the low. So let me just push it on the side, this guy. So if I'm looking from this high right here to the low, I can clearly see that this is corrective. Why? Because I see that this is a zigzag, although there's a gap here. I see that this is A, and then B, and then C. And then I see a push higher, and then I see what I believe is 1, 2, 3, 4, 5. So that's probably A, and then B, and then I think this is 1, 2, and then 3, 4, 5. Because again, you can clearly see that's the low, not this guy right here. So I believe here we have a double zigzag. Now, of which degree, that's the question. Of which pattern? You see, that's the question that I'm asking myself as I talking to you. I don't know because the data is incomplete. So that is not really going to be my point of focus when I'm like breaking down this chart. I will keep it in mind. So I can simply label this as W here, and then I have X, and then I have Y here. Now let me look at this. It's 1980 till when 1993. So I think it would be safe to say maybe, well, this is um, a minor degree or intermediate, but I would choose the intermediate degree here in this case, the intermediate degree. If not, I don't think it would be like really, really reasonable to go with another degree. I believe though this intermediate degree is sort of like cool. Now I cannot tell if this is wave 5 or maybe 4, like this is wave 3 and then wave 4 and then this is 1, 2 of an extension. I don't know. So I'm not going to like put an emphasis here. Now I can see here there's some sort of movement. We created a new high right here above this high of 38.25. Now the highest high in this case of silver is 49.78, because I believe here the current trading price is like what? It's 38.92. So what we're going to do is shift to a time frame that will allow us to actually see through this rally from this $3.56 per, I don't know, what do you call them, like silvers, is it? Because I know like there's bushels for like softs and grains. I don't know like really for silver, what do they call it? Or maybe an ounce. Yeah, I think it's an ounce. So it's like 3.56 ounce. So here we're looking at this low right here. Let me just pull a little bit closer for you so that you can literally see what is happening. Now we have this low, and then this low, then like that is the low following it. The lowest low following the low of $3.56 was now at what? At $4 and then 6 cents. So which means this is still the lowest low. Now the question is here, do I see a pattern I recognize? Well, here I believe I do. Why? Because, well, in this case, I believe I'm looking at an impulse beginning from this low right here. Why am I thinking that way? Well, let me show you. I think here I can see 5 waves, 1, 2, 3, 4, 5. And then I think that's an ABC. And then I think I'm seeing another zigzag here. And then I'm looking at 5 waves, 1, 2, 3, triangle, 4, and then 5. And then that's AB. We created a new high. That's C. So I think this is 1, 2, 3, and then 4, 5 of a what? Expanding leading diagonal wave 1. Now, the first thing that you want to keep at the back of your mind are the rules pertaining the what? Pertaining the expanding diagonal. One of them says wave 3 must be shorter than wave 1. Well, that's the old edition anyway. I still use it. So that's the measurement of wave 3, because I believe wave 3 begins here and ends there. So I'm just going to like mark that out. Yes, you can see this possible wave 1 ends within the range of what we believe is wave 3. Another rule says wave 4, which is this guy right here, must be greater than wave 2. So let's just go and measure this and then go and project it there. As you can see, this also falls within the range of a possible wave 4. So I can deduct in this way and say, well, we have what? We have, say, maybe wave 1 here in this case as an expanding leading diagonal. So there it is. So we're also going to highlight this as the peak of what? The peak of our wave 1. So I believe here we have 1, 2, and then 3, and then 4. There's clearly no overlap, as you can see right about here. Yeah, there's no overlap. It ends halfway. And then 5. And then I believe we have a correction, and then 1, 2, and then 3, 4, 5. Either way, WXY is still fit for wave 2. So which degree are we going to choose? Let's look at the number of years. It's 1993. Yes, February 1993 till when? Till 98. That's a lot of years. So I would consider the minor degree here. So minor degree, for those of you who know, is actually degree number 9 if you have been following me for a while. Or if you can go and check the book by Robert Prechter, which is titled Key to Market Behavior, you will see the numbering on the far left side. So you know that we also use color number red. So if this is number like this entire diagonal is wave 1 degree that is higher than minor is intermediate. So let's go and just fill it in here. Let's put it there. So again, we use the blue. If you like, you're someone who likes to, I don't know, maybe fake someone's work, which is not a bad thing, by the way, I think this will do you some justice. So let us pull this down so that we can get a clear picture. So the question that we have is, we are looking at wave 2. Is there any correction or a counter trend move? As you can see here, wave 2 is a counter trend move. Wave 1 initiates the trend, and then wave 2 is a countering the trend. Is there any move that is of almost the same magnitude or greater, that is magnitude? I believe this is the, like this is right here what we want. But then again, it's not definitive, given that we can see somewhere, somehow here, it would be more difficult to count because how do I put this? There's like different Elliott wave patterns, a zigzag, there's a flat, there's a triangle, etc. So which one is it under the Elliott wave, like rules and guidelines? Does it begin here, or maybe did it begin somewhere? Those are the questions you want to have at the back of your mind. So let's go anyways and label this as the low of wave 4. We're going to find out later on. Now, one thing also that we cannot argue about is that this peak is wave 5. So let us now like switch to line chart for your own sake, because I can see these subdivisions here very clearly. So if you're looking from this low right here, I think we have a diagonal here according to the line chart, and say 1 maybe, and then A, B, C, maybe 2, because I believe this is 1, 2, and then 3, and then 4, and then an extended fifth as usual. And then I do see an A, B, C possibly, and then A, like that's A here, B, C, and then maybe D, E as a triangle, I believe. I believe this is a triangle. So if you look here at this move right here, small move, I think this is its wave 2 right here. So if we are switching back to this guy, I'm just going to first highlight that triangle that we spotted earlier. So I believe it's wave 4 of a certain degree within this trend. So let's also mark that low where wave 4 ends, that is wave E of 4. So here, if you can see, it said it's a diagonal. So I believe somewhere we do have a diagonal, and then we have a truncation in this case of either a double zigzag or a regular flat is truncated. So I'm just going to go on and go 1 degree lower, because again this is wave 3 of which degree? Of the intermediate 2. So 1 degree below intermediate we have minor degree. There we go. It's 1, 2. So we have 3. You can clearly see that wave 3 from this low to that high is longer than wave 1 from this low to its high. On top of that, wave 4 and wave 1 do not overlap, perhaps, and they're also in the price territory of wave 1. Now the question is, if this is wave 4 and you agree, is there any other way? Maybe let's say let's say this is wave 1 right there, 2, and then 3, 4 maybe on this low, and maybe consider an extension. Yeah, it's highly possible, but then how will you label this corrective pattern here? Because I believe you can see this is a 1, 2, 3, 4, 5 leading diagonal, and then you see counter trend move, and then you see a possible 1, 2, maybe 3, 4, 5 here. And then if you look closely on this, on this decline, I believe this is 1, 2, and then you can see there's this sideways movement here. Because if you count here from this, let me just zoom again. I believe this is 1, 2, and then 3, 4, and then 5. So it would be 1, 2 maybe, and then 3, 4, and then 5 right here. It would be more reasonable. So instead of placing our wave 4 and considering an extension here, I think it's better to consider an extension without exaggerated subdivisions. So what does that mean for our wave 4 right here? Wave 4 is a possible expanded flat. Well, not a possible in this case, given that it has already unfolded. So what we're going to do is just simply label here A, B, and then C. And I think it gets easier from here onwards, because again, you know that this is wave 4 of which degree? Intermediate. So we are going to go just 1 degree below. You see? So now you have 1, 2, and then you have wave 3, and you can clearly see wave 3 is longer than wave 1, and also wave 4 right here doesn't end in the price territory of wave 1. So which is another good thing. So here you have your 5 right here. Now the question is, because you can clearly see there's this correction which is like having its low right about there, which is like the 2nd of March 2020. Let's go and highlight that. And I want to make sure I'm precise. I don't know what's happening with my laptop right now. Something is off. So there it is. It's like a decline here, and then there's a rally here. Now the question is, if you are having these 5 waves, let's go back. Well, let's just zoom out simply. You have 1, 2, and then 3, 4, 5. This is clearly corrective. Now the question is this impulsive? Maybe according to this line chart, it might be impulsive, but I would disagree considering the slope of, let's say this is 1 and then 2, and then on top of this you are looking at this is wave 3. The slope analysis is the problem. Otherwise, you can see how sharp our wave 1, possible wave 1 or A is. So we would say maybe it's what we call a kickoff wave. So a kickoff wave, typically it has a great volume, but the problem with this is the slope. Again, it's normal for a kickoff wave to have a volume that is greater than that of wave 3, but the slope, in terms of slope analysis for wave 3, I would disagree. So I would rather, in this case, consider a correction. So I would say, well, I see 1, 2, possible 3, 4, and then maybe 5 here. And then that's 1, 2, and then 1, 2, 3, a triangle, 4, because I believe we have a triangle 4 here. By mistake. I think this is how it is. And then A, B, C, D, and then triangle ending there. So it's 1, 2, 3, and then 4, and then 5 somewhere there. So we would say 1, 2, 3, 4, 5. And then look at that, because it would be more unreasonable to say 1, 2, then 3, and then that's 4. So I think we have this ABC, and considering this is a possible counter trend move following 5 waves, it's more reasonable to say that this is a triangle. So let's go and count it. How many years from the high of 2011 till 2020? So I think the reasonable degree here in this case would be minor as the subdivisions. And then let's go and look at this one closely. Now, you know, this one I've looked at it a couple of times, and this is how I actually go about it, because also I'm running out of time. I don't want this video to be very long. Let me just keep it on the monthly here in this case. And then I believe with a triangle, I've already spoken about the slope analysis for this one. And now, because I've been following silver from this low right here of 11.22, this is by far my outlook. I believe we're either in a flat here, or maybe say a triangle. We do not know really. There it is. You see, so I believe we have wave A at that low of 11.22, and then a possible wave B, of which degree? Of, you guessed it, intermediate, which is 1 degree above minor. There it is. So why am I thinking this way? I have spoken about the slope analysis, and if you look at it here, there it is. Look at your wave 3. It's kind of like hugging the lower boundary. And on top of that, if you are considering this move right here, you will see it on lower time frames as to why I don't think it's 5 waves. This guy, let's say, maybe label it as 1. I will show you. So you can see right here, I have this WXY. This is clearly, you know, an ABC to the downside. Then, you know, WXY. Let me just go 1 time frame low so that you will see, you know, why I am thinking in this insane manner, maybe to some of you. Well, let me just make sure this low is in order, And then this triangle, you can clearly see where it ends, exactly 5 waves to the downside. Now, I want you to look at this from this low right here of 1122. Then let's hide it from monthly. I'm sure you can clearly see right here that we have 5 waves that you can easily count even on the line chart. 1, 2, 3, 4, 5. Although if you switch to the bars or candlestick, it can be a bit of a different count, but it does make sense that this is 5 waves being with wave 5 being the extended wave. Again, this is a commodity silver. And now this guy, you can clearly zoom in right here. Let me zoom in for you. We know that this is a possible contracting diagonal. In a contracting diagonal, wave 3 must be greater than wave 5. So that's the possible origin of wave 3, and that's the possible end point of what? Of wave 3. So what do you see? If we project the purported length of wave 3, I believe this is what we get here. Wave 5 falling within the range of wave 3, making it shorter. So let me just go on, like, draw everything which I believe you need to see. There we go. And secondly, we know that wave 4 must be smaller than wave 2. There's the range of wave 2, and it does seem to fall within, okay, let me just maybe draw it in such a way that you guys will see it. I don't know what's happening with this laptop. There it is. There it is. That's the range of wave 2. So you see that of wave 4, it's falling inside. So I don't think this is 5 waves, because we'll be ignoring completely the guideline of the right look, and also the subdivisions. If we went in closer, I think we'd find things to be totally different than we thought. I believe we have a 1, 2 here, and then, or maybe 1, 2, 3, 4, 5, 1, 2, and then 1, 2, 3, 4, and then 5 here, and then that would mean it's like 1, 2, 3, 4, 5. And then we have an A, and then B, and an ending diagonal wave C. One of the reasons that make me to believe that way is because how will you count this mess right here? How will you justify the slope of wave 3? The volume, you can and say that's a kickoff wave 1, but the guideline of the right look, probably the most important guideline, is the one that you cannot ignore. So one of the things that happened here is a truncation. I remember going through this a while ago. I remember I counted this as wave A, this guy right here. That's 1, 2, 3, 4, 5 leading diagonal wave A. And then B, because you can clearly see this is 5 waves on lower time frames. In fact, if you said this is not 5 waves, it's 3, how will you account for this mess? Maybe you'd say this is what W, and then X, and then Y. Well, it wouldn't make any sense, because you'd be caught here again. You have like wave 1, 2, and then you have 3, 4, 5. How will you account for this? Another 5 waves. So it's W here, and then X, and then Y. Our wave W had a truncated wave C. So that's wave A. As you know, that one of the waves most of the time in triangles will have let's say double zigzag most of the time. That is, it's going to be a complex wave. So again, you can clearly see in this case, we sort of had 5 waves. Well, I think it was a W, again X here, and then Y if you went to lower time frames, if I recall well. So anyways, you have like a triangle A, B, C, D, E for wave X, which bottomed at 21, 9, 11. And then if you do like your internal wave count here, you will find that this is 1, 2 right here, and then you have subwave 1, subwave 2, subwave 3, subwave 4, and then subwave 5. So it's 1, 2, 3, 4, 5. So that's wave A. Now, why do I believe this is wave A and not here? Or maybe say this is let me say this is 1, 2, and then 1, 2. Well, remember, we're considering a W, and then X, and then Y. Already the momentum is waning off. The slope is an example, of justification by the market that the momentum is like going. Secondly, we are approaching the top, and as we are approaching the top, what you will see is that the size in terms of candlesticks is, as you can see, there's like a lot of overlaps as if it's like, corrective. What you will see is, if you understand the concept of Japanese candlesticks well, the moment the size of the candlesticks start to get reduced significantly, it means that the momentum again is waning off. I'm someone who has been, for example, let me just show you here. You see, this was a decline here. You can see every time there's a decline, most of the time you'll see bigger candlesticks, because although the market is pushing higher, it's struggling. Most of the people are so much interested in pushing silver to the downside. The volume for, like, declines is very, very high compared to the volume of the rallies. Now, I believe this is A and then B, and I think this is 1, 2, that is of wave C. So I think this is 1, 2, and now we're in wave 3 of C. So we still have 2 more waves, to see, that is 4 and then 5 before the end of this rally. And it would make sense, because if you go back to, higher time frames in this case, what you are going to see is we are basically approaching this high. So a lot of liquidity here, for those of you who understand the concept of liquidity. So I think we might get to see, maybe say, an expanded flat. I don't know why, and I don't think this is the end of a trend, considering the fact that we will possibly take out that high. Remember, when a main trend is ending, it cannot have a flat like that. If it's wave 5, like for example, let's say if it has been a long-term rally, we cannot have wave 5 followed by a flat like that, whereas it's meant to like retrace very deep. It's going to, like, ignore all the rules of the market. Unfortunately, the wave principle, for those of you who do not understand it and are still new to it, it is the rules of the market itself. Elliott didn't create the wave principle, he discovered the rules of the market. That's all. So W and then X, and then that's your wave A, and then B here, and I think this is 1, 2, 3. Considering that our wave A was sort of simple, our wave C of Y should be a bit more complex. Anyways, a push higher is what we're expecting. Now we don't know whether this is wave 3 and then ABC of an unfolding triangle. We don't know, which is why right now would rather like stick with the available data. So we have seen this is A, B, and then we said that's 1, 2. Now there are multiple wave counts that we are considering here, but this is the one that I'm considering as the prime wave count. I will show you when I'm going to lower time frames why. Some people believe that this is 1 and then 2, and then your wave 3 is there, and then 4, and now this is 1, 2, and then we're pushing higher. That is, we are having a possible extended 5th wave. Now, I think that's going to make sense for a lot of people, but then when I'm looking at it, well, the only advantage about it is the fact that it's going to give us a wave 3 that is longer than wave 1, and it's something that we like to see so that we don't worry, because currently I think our wave 3 is basically shorter than wave 1, you see, ending there. So I believe the wave 5 that is unfolding currently is going to be shorter than wave 3 itself, because if you are doing the Fibonacci projections, as you can see, we are saying invalidation level for this wave count. What does that mean? It means that once wave 5, the current rally, reaches that level, chances are we are going to have invalidated this scenario. That means instead of our wave 3 being there, it's probably going to be somewhere there, and then our wave 4 be here where we have wave C. But I would like to, like, stick with this one. Now the reason I'm thinking that way is because of this guy right here. Now for some people, they said this is wave 3, then they said this is A, and then B, and then C, D, E. Myself, I did it that way. So that would mean it's 3, then wave 4 triangle ending here, and then wave 5. A, B, C. Now I disagree with that for a couple of reasons, really. One, if you're counting here, you are going to find that this is not 5 waves, this guy, it's 3 waves, a zigzag. And on top of that, if you are counting closer here, you are not really getting 5 waves, but three. So I will leave that to you as an analyst to go through it. But the expectation, whether that's the count or the one with wave three here, is that we should push higher towards this cluster of Fibonacci levels. Although I don't think we will take this 1.618, we'll just fall short of it, before we reach $44 an ounce. We will just decline, to start with our wave four. And that would mean that also, because if you can clearly see, our wave four is a sideways Elliott wave corrective pattern. So that means you might expect to see a zigzag, maybe something like that, or we might see a triangle, because a triangle has a tendency to have a very sharp wave. So that sharp wave A specifically will sort of like account for a sharp corrective pattern. So most of the time in silver, what you will see in that case is wave A entering the price territory of wave one. So for now, we'd rather focus on trading our fifth wave. Ladies and gentlemen, that does it for me today. Have a good one.